Hi guys, it's Kevin Al from Infinite Wealth. Today we're going to talk about the biggest one-day point drop in the market, which was on March 9th, biggest drop since 1997. We're going to talk a little bit about coronavirus and what you need to do for your portfolio now. Hi guys, today is March 10th. Well, yesterday we saw a 7+% decline on the S&P 500. All the major indexes were down. So now, what do we do now? Well, first thing is you want to make sure you don't make any emotional, irrational decisions. Right now the market has closed. On the 10th, we were up 3.37%. So if you would have sold yesterday towards the bottom, you lost 3%. First thing I want to talk about today with you is the investment policy statement. You should have an investment policy statement. If you do not have one yet and you're running your own investments, now is probably time to start thinking about that, writing it out, getting everything down on paper. What this does is this makes you not make emotional decisions with your investments. So I'm just going to read something out of my investment policy statement. I wrote, "We understand that short-term drops in price of individual investments can be sudden," which definitely this month has been, "severe, and upsetting. But we are committed to focusing on permanent growth of our entire portfolio rather than fixating on temporary declines of isolated investments." Now, this is something I've learned over the last 15 years of running my own investments. You don't want to make quick emotional decisions. Markets are going to go up, markets are going to go down. As of late, markets have been very highly valued compared to averages over time. So when you know that, you expect that the markets should go down, and it's normal, so you're not surprised by that. Since we intend this portfolio to last the rest of our lives, our investment horizon is 50+ years. We don't plan on spending all of our money. We plan on passing that on to our children for the next generation. Then my final statement is, how the investments behave in the short term matter much less than how we behave as investors in the decades to come. We all probably know somebody or be related to somebody that will die of coronavirus at some point. This is unfortunate. This is kind of why the markets are overreacting with everything that's going on. But we just want to be careful about what we do here in the next couple months. Make sure that you have your asset allocation right. That's the amount of money that's distributed between your stocks, your bonds, and your cash. My advice to you as an experienced investor would be that these things are normal. The best thing you can do is to not make an emotional decision. Stay the course. Keep your money in. One of the worst possible things you could do at this point would be to sell out of all your stocks, go to cash. Because the problem with that is, it's not just when you sell, so we don't know. We could be at the bottom, we could not. Stocks could go up from here, stocks could go down even more. The rule I have is that you can expect at least a 50% loss to whatever percentage you have in stocks. So for example, I have a 70% stock allocation. So you can, just a rough rule of thumb, you can expect in a market downturn, you can take half of your 70, which is 35%. So I could be looking at least a 35% decline in my portfolio. Now, if that's something you haven't looked at in your investments, now's the time to look at it. If you need to increase your bond ratio, lower your stock ratio, this helps you sleep better at night, helps you stay the course, helps you keep on track with your investments, then that is a good thing to do. I would recommend at this point, if you're really wanting to do it, instead of selling out, I would increase your bonds by 5 to 10%. Rebalance your portfolio, see where everything lands in a couple months, and in the meantime, work on your investment policy statement. Write all this stuff down. Take how you feel now, put it in there so you know what to do. Everything that I do on my investments is written down on these 6 pages. Very easy for me to flip through it. Tells me exactly what I do. There's nothing on these pages that says anything about a pandemic virus that would make me sell all my investments, so I will not be selling all of my investments. Just think about history. We've been through 2 world wars, we've had terrorist attack on our soil, we've had the whole financial crisis of 2008, and the market has always bounced back. There's nothing that's telling me that this time is going to be any different than before. So the other thing I'm going to do today is I'm going to look at my 401k. I probably haven't looked at it in 3 or 4 weeks since the market started going down. I know what my high water mark was, which is the maximum amount my portfolio was before. We're going to log on today, kind of see where it's at, see what everything is done. It's not a big deal. My target allocations is the Russell 1000, should be at 31%, Russell 2000, which is at 12%. That's the small cap stocks. My guess is that got hit harder. I think the Russell 2000 was down closer to 10% yesterday. There's a small mid equity fund in my 401k that's 3%. And then for international, I have a BlackRock International Equity Index Trust, 16%, International Equity Fund at 8%. And most of the coronavirus stuff has been overseas, so my guess is that those have probably went down a little bit more also. And then I do run 30% bonds. I have a BlackRock Bond Index Trust that I run at 15% and a bond fund at 15%. So next I'm going to just log on to my account, see where all my percentages are at, and then we'll talk about rebalancing. I do have it written in my investment policy statement about rebalancing. I rebalance every quarter, so every 3 months. And then also if the percentages from big declines or big upswings get off by 1% or more, I do have it set up where I will rebalance. You do want to be careful rebalancing in taxable accounts because you have to worry about capital gains. But today we're only just talking about the 401k. No tax consequences. No fees. You can rebalance it back to your original asset allocation. That helps control your risk going forward. I have not logged on yet, but once we log on, I would assume that the bonds are going to be higher than they should be. The stocks are lower. So I'm going to sell the bonds that have went up in price, and I'm going to buy stocks that have went down in price. And over time, that has been shown to add an extra 1% to 1.5% on your annual returns. All right, so I just logged onto my account. My high water mark was around 525,000. Looks like as of yesterday, I was down to 450,000. Looks like my performance year to date is at a minus 10.21%, which is really not as bad as I thought. Let's look at performance for 1 year. I am plus 1.31. So basically what the market's done is it's gone back to the value that it was a year ago. That is normal. That's something that you can see time to time. It's nothing really to get too worried about, so I'm not going to worry about it at all. Looks like yesterday the bond fund returned 0.32%. The international was down 7.73%. The Russell 1000 was also down 7.73%, so they were down about the same. Russell 2000, like I said, was down 9.35%. That's small cap stocks. That's expected. So when market declines happen, your small caps will go down faster. That will recover faster. I haven't looked at it for today, but tomorrow we'll see where that goes. The other bond fund I have is down 0.51% yesterday. The international equity was down 6.88%. And the small mid-cap equity was down 9.04. So it looks like everything that I have for investments was down between 6 and 9% yesterday, but my total performance year to date is only down 10.21%. So almost all the money that I lost was lost yesterday, and this is on paper. I haven't sold anything, I haven't done anything. With what the markets did today, I probably gained 3 to 4% of that back, so you're down 6% of the year. No big deal. It'll come back. Do not panic. So then next up, we want to kind of look at percentages to see if I want to rebalance. So I said the bonds will probably be higher. Looks like the BlackRock Bond Index is at 17.66%. And the bond fund is at 17.49%. Those usually track pretty close. So it looks like I'm about 2.5% over on each of those. So when I rebalance tomorrow, I like to not do it on volatile market days. So if the markets aren't too crazy tomorrow, I'll rebalance. I'll take those back down to 15% each. My Russell 1000 is at 29.39% of my total portfolio. Target's 31. So we're going to sell some bonds, buy some Russell. Russell 2000's at 10.48. Target is 12%, so we're about 1.5% low on that. International 7.51, and my other international BlackRock's at 14.77. So BlackRock, we're aiming for 16, so we're down 1.3 on that one. And the International Equity Fund, target is 8, so we're down just 0.5% on that one. So when I do rebalance in a day or two, when the market's not too crazy, I will rebalance back to those original percentages. My portfolio will be back to the risk that I'm willing to take. So I'm at a 70% stock, so that'll be a maximum of 35% drawdown, just as a rough estimate. I've only came down 10%. I'm not worried, that works for me. If that's too crazy for you, then you need to increase your bond percentage, decrease your stock percentage. If you're 7 to 10 years from retirement, you have really nothing to worry about. If you're less than 7 years, you should not have all your money invested in the stock market. And then also if you're less than 2 years into retirement, you need to do some other things too. So that involves having some cash on hand for stock market declines like this. So for example, I run my mother's portfolio also. The stock market was up very well in January, so I took her required minimum distribution right at the first of the year, got that money out. Now the stock markets went down. I don't have to worry about pulling the money out at a lower level. We'll wait to see for next year. If it's high again next January, we'll take it. If it's not, and we think it's going to be higher by the end of the year, we can wait all the way up till December of 2021. So I have almost a 2-year window before I have to pull money out. So that gives it 2 years for the market to bounce back. It's almost unheard of for the market to be down more than that. So you want to start thinking about those things when you actually are pulling your money out. So just to sum up, look at your 401k, rebalance it back to your original asset allocation if you have one. If you don't have an asset allocation you're aiming for, you need to figure one out for yourself and also write an investment policy statement. The best thing that you could do if you don't have an asset allocation is I would do nothing. Just stay the course, wait it out, start working on your investment policy statement, your asset allocation, and be ready for the next time when the market does turn down. So that's basically what I'm going to do for my investments. You're going to want to look at your investments but make no major changes. Next video, what I'm going to do is look at some just preparations for the coming coronavirus. I'll put my pharmacist hat on, things you need to buy, things you need to be prepared for. We're not talking about panic buying, just like we're not going to panic sell in the stock market. We're not going to panic buy anything, but we're going to make some reasonable, rational choices. If you don't want to wait a week on the video, just as a pharmacist, the first thing I'll give you to start on is you need to think about medications. A lot of your medications are coming from China. There will most likely be supply interruptions on your medications. So now just start focusing on your medications. Make sure you're not running down the last one. If you have insurance that allows 90-day supply, maybe get a 90-day supply filled if you can now. If your insurance only allows 30-day supply, most insurances will allow you to fill your pills 6 to 8 days ahead before they're due. So go ahead and talk to your pharmacist, put your refills in now, fill them as soon as possible. The next cycle when that comes around, fill them also again as soon as possible. That way you're a couple weeks ahead at least on them. So if anything comes up with supply interruption, you'll have a little bit of wiggle room on any necessary medicines. Main medicines that I would focus on would be any chronic condition medicine, so asthma medicine, heart medicine, insulin, diabetic medicines, things that you'd have to have just make sure that you do have some of them on hand. Thank you for watching the video today. I appreciate you sticking with me through the whole thing of what you need to look at for your investments. Stay tuned. My next video will be on preparations for coronavirus, things to prepare your family, things you want to buy, things you need to do. Until then, thank you for watching. If you do like the video, I'd appreciate it if you'd hit the like button. If you have any questions or comments, leave them in the section below. And also, if you'd subscribe to my channel, ring the bell so you get notifications on future videos that are coming out. I've got several planned just around the coronavirus, maybe things you haven't thought about. Those will be coming out in the next few days.
Tell me pretty lies, look me in the face, tell me that you love me, even if it's fake.